This podcast is proudly brought to you by TreasuryONE, South Africa's leading treasury solutions company that unlocks financial value for your business. Welcome to this week's episode of The Currency Focus. I'm Jacky Cameron for BizNews. Joining me to discuss the volatile South African rand and sharing deep insights on how to assess where it is heading in relation to major currencies is Cilliers, currency strategist at TreasuryONE. Just when we thought it was going down into 13 rand to the dollar, then it popped up again into the 14 rand to the dollar, and now we've seen it dipping again.
We've seen it dipping again, and if you look at what's really happening, then it's a story of the dollar weakening. The euro has gone above the 122 levels, and breaking the 122 level was quite significant. And the next target level is actually now reaching up into the 123s, etc., which means that there could still be some further gains on the rand if that actually happens. Today is an important day because today we have the Federal Reserve meeting minutes coming out, and then we'll see what was discussed and what was the feeling of the people within the meeting, and also how they look going forward and their view on going forward.
Whenever I chat to, I'm really quite struck by how many different feeds of information have to go into your assessment of the rand and how much data you have to look at from around the world and South Africa. Are there any key numbers that you look out for to fine-tune this process?
There's various figures. If I go back to the 87s, the name of the game was looking at the trade balance. And you go to October 1987 and markets tumbled and stock exchanges tumbled because the trade balance figure of America went above 17 billion, which today is actually a drop in the bucket if you look at where it's today. So there's certain things over the years that comes to the forefront and that becomes vital. Now, if you go to 2020 and you look at the pandemic, then the pandemic and the figures surrounding the pandemic and the impact of the pandemic had become vitally important and the ones to look at. And the one place that everybody looks at this point in time is the American economy and how that will grow and how growth in the world will spin off from that growth and also the growth out of China. And then the figures in America becomes extremely important. Inflation figures, interest rates, retail sales, any economic figure out of America at this point in time that gives you an indication of what the growth could be and where the growth will be going is important. And the impact of that growth on the rest of the world and eventually then also South Africa.
And then you also have to look at China, a major trading partner for South Africa, and China's notoriously opaque with its data, and sometimes there are lots of question marks about the accuracy of the data as well. How do you factor the China situation into your forecasts?
No, well, the Chinese forecast is extremely important, and the figures coming out of China is extremely important. We must remember that China is one of our biggest trading partners. There's a lot of trade being done with China. There's a lot of commodity exports. There's a lot of other imports out of China into South Africa. We all know if you go into the shop and you buy something, it says made in China. So, that's the trade figures out of China and the growth out of China. So a little hiccup in China causes influenza in South Africa because of the big trade figures and the trade amounts that we have with them. So you have to look at the Chinese figures very, very importantly. Hence, also what happens in China happens, as I said, influences us. So if China and America starts going into a trade war, and we know about all those trade war discussions over the 4-year period that Mr. Donald Trump was in power, it's now sort of subsided with Mr. Biden. But the tensions are still there. So tension between China and America, American sanctions of any kind, regulations of any kind onto China, anything that impacts on China impacts on South Africa. So yes, the Chinese figures, but once again, they're the second biggest economy in the world. So what happens there is important for us, not only just because of our trade figures, but because of the impact of the Chinese economy on the rest of the world.
And then you've also got the European Union to contend with, and that's not a homogenous group of countries. They're quite different. They've got their own different underlying fundamentals. How do you look at Europe?
Well,
bring that into your rand
once
calculations.
Again, if you look at Europe, you take all the figures. Once again, retail sales, the impact of their quantitative easing program, the level of their interest rates, how they come out of the pandemic, how growth figures are happening in the European economy. So every little piece of economic data coming out of Europe is important for us. They are also a very important trade counterpart of South Africa, and a lot of trade is being done with them. So once again, literally every piece of economic data that you can get, every little piece of information that some politician drops, or a little bomb that they drop, or an outcry that they make about something, is important to us. On the European side, because of our trade with them, they're very, very strict on their trade. If I think in terms of our citrus exports to Europe, for instance, in Europe they have something called the prohibiting of importing black spot. Now, black spot is a tiny, tiny, minuscule little spot on a fruit that you get in certain parts of South Africa. Now, if there's a certain amount of strikes in the European Union on getting any imports of fruit from South Africa with a black spot on it, then they close their markets off. Small little things, eating certain industries, is being watched by us and looked at. It helps that we've got a lot of customers through various industries. And in our interaction with them, we also, apart from our own analysis and our own information, we also get information from our own clients in how they perceive markets to be, pricing to be, whether the demand is going up, whether the demand is slowing, prices going up, etc. So a lot of information that goes into the analysis of deciding what we actually think and where things can go.
And what about Australia? A lot of South Africans immigrate to Australia, but there are also often parallels drawn between the South African economy and the Australian economy with commodities, and then both countries trading with China. How closely do you pay attention to what's happening between Australia and other countries? And how does that play into the rand?
Well, I can just reiterate that everything is important. Australia is also commodity rich and also a commodity exporter. So if you have commodity prices going up and South Africa doing well out of commodities, then obviously Australia would also do well. And if there's a hiccup in Australia because of something that happens in China, then there will be a hiccup in South Africa as well. And then there could be a hiccup between us and Australia. And we've seen many businesses out of South Africa opening offices in Australia. And obviously there's then a lot of trade between us and them. Not as much as with China and not as much as with Europe, but there is trade between us. And if there's trade between South Africa and a country, then it's important to watch those figures and to watch what happens in that country, because it influences the trade reference and trade figures.
Andre, we often get asked at BizNews, is now a good time to invest offshore? And now with the rand looking relatively strong in relation to the dollar, do you think it's a good time for people to think about moving money offshore now, perhaps not to invest now, but maybe hold their money and then start looking for investments? What's your general guideline here?
Okay, I'm going to start by answering and saying that it's always a good thing to invest in other countries. It's always a good thing to look at various options to invest your money into various places and diversify your investment portfolio. At this point in time, with the rand being fairly strong and trading at very strong levels, it's an extremely good time to actually look at increasing the pace at which you invest offshore and maybe do a little bit more than what you would normally do and get a little bit of a bigger foot into the door of offshore investments.
And would your first choice be the US dollar, or how would you diversify offshore from a currency perspective?
Well, I think America is one of the countries that shows the better growth figures. If you look at first world countries, and I'm leaving China out as an emerging market, but as a first world country, America, and their interest rates is at least still slightly positive. Europe, I think, will take a little bit longer to come out of the pandemic and get their growth figures back, and their interest rates are negative. With a slower pace of getting out of the pandemic than America, I think America is a better place. But I also think that Australia, with higher yields and also being a commodity-rich country, presents everybody with fairly good opportunities of also getting some of their investments into Australia.
You've been listening to Andre Cilliers, currency strategist at TreasuryONE. I'm Jacky Cameron for BizNews. This podcast was proudly brought to you by TreasuryONE, South Africa's leading treasury solutions company that unlocks financial value for your business.